a friend of mine reached out to me saying there's a great tech company. The CTO of a previous company is starting a company. He needs some business mentoring. You understand tech enough. Can you spend some free time to mentor him? I said, this sounds good. I started off. About a year of mentoring around 2010, I really liked what I was doing. And by the time the whole concept of startups was starting to grow, and 2011, a bunch of friends, and we used to call ourselves the bus stop gang because all our children used to go to the same school. The dad used to come and drop the kids to the bus stop, and then the dads after the bus left would shoot the breeze and try and figure out how to make the next million. So all the dads got together and decided that we must do angel investing. So we somehow sourced a couple of companies, and in 2011 we made 2 investments, and we thought, we've arrived in life now. We are now angel investors, and now the next thing is a trip to wherever we want.
Hi everyone, and welcome to the first session of IIM-CAN. We will have a lot of such sessions in future where we will discuss about transactions that have been screened by our team, and those would be for angel investment. My name is Arun, as you can make out from the screen, and I'm a pass out of 1991 batch. After dabbling in investment banking and corporate finance till 2008, I decided that startup was a good place to be in, and I've been focusing on raising funding for early stage companies from venture capital investors and it's either Series A or pre-Series A. Dr. J.J. Bhattacharya dominated the idea of this initiative, and Aso took up the cudgels to start this. He joined hands. He enrolled me and Sandeep to make this initiative into a practical solution. And the way I want to structure this presentation is, first, Prabir, Panappa, and Subrat will speak about 10 to 15 minutes each separately. So that will be a 45-minute discussion from the panelists. Then we will talk about why IIM-CAN, and Sandeep has made a small 2-slide presentation on why we should look at IIM-CAN. Finally, after that, we'll throw the floor open for discussions and Q&As from members. So to start off, the first person I would like to introduce is Prabir Chatterjee. Prabir is an alumnus of 1985 batch, and he has worked in various organizations including A.F. Ferguson, and he spent a lot of time in Eastman Kodak. Prabir then in 2014 has become a co-founder of a wealth management company which is registered with SEBI as a PMS manager. So he's doing both wealth management and portfolio management for his clients. In April 2019, Prabir, along with 3 of his batchmates, decided to focus very actively on the angel investment space, and they formed a firm called Grey Matter and Greenbacks, which literally translates into intellect and capital and money. So nice name, Prabir. So Prabir, can you just walk through your experiences?
Hi everyone. Thanks Arun for the introduction, and thanks to Arun, Aso, and Sandeep for taking this initiative to start this IIM-CAN network. I think it's an idea whose time has come. Currently, I actually am a wealth manager. I run a portfolio management company with another batchmate, and angel investing is my like second job or passion or hobby. And actually, we have formed a very small group of batchmates. There are 4 of us. In fact, 2 of them I think are in the call today. Rabindranath, based in Chennai, Sunil Saxena based in Mumbai, and Nishesh Mehta based in Mumbai. We call ourselves Grey Matter and Greenbacks, and we do all our angel investing and mentoring together. And we found this way of doing it quite useful, and I think I can share some of our experiences on that also. So what I thought is that I'll just share a small, PPT. It's not that I want to read through the PPT, but just to kind of give you a thread or structure to what I'll talk through, today. So yeah, so we are trading as angels, and we have to be careful because we are trading on other people's dreams, the startup entrepreneurs. Okay, so I thought before I start, I just want to, make it a little interesting that how to recognize an angel. So there are certain physical characteristics, you can say. You can see it on the screen. Basically somebody who is eager to give his money to others, in the hope of 100x return. Okay, so that's how the angel looks pre-investment, and at the end of the PPT, I'll tell you a little bit about how they look post-investment. But wait for that. So I think before we start anything about angel investing, just a little bit of caution to everybody. I suppose that most of the people who are here and interested in becoming angel investors are already angel investors. So I'm here wearing here more my wealth manager hat, and just to be, I think we have to be very clear that angel investing cannot be your only bet. It is part of your asset diversification strategy, and I would recommend that you just invest only that much which you can afford to lose completely. So whatever it is, like 5%, 10%, 20% of your wealth, if you don't mind losing it completely, put it in angel investing. That doesn't mean that you lose it, but there's a high chance of doing that also, and or you can hit the jackpot, of course. And you have to be prepared for a longer time horizon. It's not like you can get in and get out very quickly. So you have to be patient. Minimum 5 to 10 years. You're extremely lucky you can get an exit in 3 years, but normally it takes more than that. And one more thing, again, like just want to, so I'm sure like many of you know that, see, even in the listed securities space, like there are many multi-baggers who give angel investing type of returns, over a period of time, which have given. So, and obviously they have lower risks because they are much larger companies, etc. So it's not that for multi-bagger returns you have to only look at this kind of angel investing or something. I mean, but still people do that. I mean, why do people still do angel investing? And my based on our experience, I would say that because it is much more interesting than just simply buying shares in some company. Because here you get an adrenaline rush. You are actually like a participant in the growth of an enterprise. You live day to day if you are actively engaged with the entrepreneur's journey, and gives a lot more satisfaction, a lot more, I think something which all of us look at, like a sense of control over what our investment we are doing. And that is, of course, if you are doing active investing. So I'll talk about what the different types of investing also. So one thing, I mean, obviously, just a quick thing of where do you find the potential opportunities to invest, and that because that is a difficult thing. I mean, you have to be like you have to scan the horizon through many channels like angel networks, and I guess IIM-CAN will become one of them. But there are already some more like the India Angel Network, the Mumbai Angel Network, the Keiretsu Forum, all these startup events which are happening all over the place, incubators, including the IIM Calcutta Innovation Park, which has a lot of potential investment opportunities which we can look at. And of course, like social media through LinkedIn, etc., you can get some leads. So that's really the, in a nutshell, what you can look at for where to find the potential opportunities. Bit about the types of angel investing. So you can do passive investing, which is a shotgun approach where you basically spread your bets. Like if you have whatever money, once you have to invest, you can spread it between 20 companies or 10 companies, whatever, or whatever is your amount, and it requires low time commitment. The other is active investing, where you choose your do proper search and due diligence and choose the company you want to invest in and be actively engaged in that in terms of mentoring, etc. And a mix of the two, which is pooling with active investors. So you have a group of people who are active investors, but you know them, you trust them, so you pool with them. So that's what most people do, where you don't have to give personal time, but somebody else is doing it for you. And different angel investing groups are in the different spaces in the spectrum between active and passive. So like for example in GMGB we are very much into active investing. If you are somewhere in the Indian angel network kind of thing, then you will be more on the passive investing kind of thing. So it also depends on how much active the so-called active investors are, or do they also just invest the money and forget about it. Just a quick recap. I think everyone probably knows this, but basically there are just three critical. There are many things. Each investment opportunity is obviously unique in itself, but there are three broad things which we look for, which is that the market size of the product or service is large. How large, that is up to you. Not everyone is going to be a global company, but it should be reasonably large that it can be scaled up. Second most important is the promoters should have the capability to execute. So, create value, whether in terms of sizing up the business or creating some kind of, asset like intellectual property which can monetize. So the capability to execute. So the promoter, kind of assessing the promoter's capability is the key thing. And the third most important thing is that there should be an exit roadmap, because more often than not, the most difficult thing is how to get an exit from startups, because a minuscule percentage of them can ever go for an IPO. It's almost next to impossible for most startups to get an IPO. So you have to have either next round of investor who can buy your stake, or there is some kind of strategic investor who buys off the company, etc. And that is very critical for investor to assess before you invest in a startup, that how that will happen. Otherwise, it gets stuck. Just a quick thing on the entrepreneurs. That's the most important thing in our opinion. Between the three which I showed earlier, so capability, integrity, commitment. Commitment, is critical, because we have had experiences where we started with some promoters and they showed extreme enthusiasm and all that, but later on, they could not stick to it because they did not want to leave their jobs and get full time into it and all that. So the startups died a natural death. So the commitment should be full time. It should not be part time, just let me try this kind of thing. It should be something where people are investing their major career stake into it. And of course the adaptability, we all know about pivoting. So the learning and readiness to change if things don't work out and move in another direction, that's very important. So a little bit about, as active angels, what we see, where we add value, and this is very critical. One of the biggest learnings we had over the past few years, and by the way, actually, Arun, we started our investment journey a little bit earlier than 2019, actually from 2017. But see, basically, we found that mentoring is a critical thing. I mean, while many people discount that, including the promoters, because many people know that, think that they know everything. But we have found that startups which can be mentored or which are willing to be mentored are do better, and they need it in many ways. One important thing is to set up a regular review framework. So when we generally, invest in a startup, we have much more close engagement in the beginning, where we almost have weekly, calls to review their progress, and we, provide them a template for reporting. So, like in terms of how the business is doing, how the operations are doing, how the set up the financial metrics, etc., and you know uh, review them regularly so that they are focused. They are focused, and they have constant, attention to those things. Strategy guidance from time to time is very important, because strategy has to change over time. Providing the right connects through our network. So basically, whether it is, new customers, new investors, new vendors, even talent, acquisition, all of these connections play an important role. And I think that's where, like, the IMC alumni network will be a great strength for people in this group. I mean, not everybody, not every angel investor has that kind of network that we have as IMC alumni. I mean, if you kind of find around, like, you will always look around, you'll always find someone or other from IMC in every organization, almost any big organization. So that helps a lot, and that's a big strength of this group, I would say. In becoming angel investors, they can provide their connections to their startup where they have invested. Helping with fundraising, that's something which people ask for, and actually, like, having investors from IMC alumni, etc., helps, give much more credibility to the startups for raising funds from future investors, future the second rounds, etc. One thing we found that personal counseling plays a big role. So, and particularly of the key promoters. So, like, there are, conflicts inevitably between promoters and, with other people. So, conflict resolution, coaching, mentoring, keeping them motivated. As you know, the startup journey is a tough journey, which Subrat and Panappa will tell us. So there are many times when you want to throw in the towel and go. So that's when the angel investor mentors need to step in and keep them going. And another very important thing from the operations perspective is making sure all compliance issues are taken care of. So you don't want to invest in a company where, despite having a great, opportunity, things get, go wrong, in the wrong direction because of lack of compliance issues. So, like, whether it is getting the right legal advice, company secretarial advice, audit and finance advice, all kind of statutory compliances, all these things, the angel investors play a big role through their network, through their experience, and we found that actually adds a lot of value. So just, as I mentioned in the beginning, that gray matter and greenbacks, we are 4 batchmates: Suril, Nishesh, Rabin, and myself. We have been doing active engagement and mentoring. Our approach is that we want to be the first investors. So, like, outside their, initial their own funding and all that, bootstrapping, family and friends, the next investor, when they go looking for investment outside, we want to be that. So we don't get into the later stages, and which means, like, our average ticket size is small, but we do a lot more active mentoring, etc., which kind of also adds value. And so far, we are enjoying the ride. We have so far, like, been engaged with 5 startups. One of them has got the third round of funding. Another one has got the second round of funding. The other three are still to get the next round, but we are kind of nurturing them. And of course, we have engaged with countless others in terms of our investment decision and due diligence process. So that's really the nutshell our experience so far. And as I mentioned in the beginning, Sunil and Ravin, I think, are in. So they can also fill in if any of you have any specific questions. As I promised in the beginning, so this is how to recognize an angel post investment. Things change, but hopefully they still have bulging pockets, money. And sometimes, if you don't get the wing to, make your money 100x, you need a parachute to maybe convert your equity to that, get back your money, what you've invested. Because one of the things that in startups which we often find is that while the business per se may be doing well and profitable and all that, it may not be able to scale up and get the next round of investment. So exit becomes difficult. So in that case, as investors who are just shareholders, you have to figure out how to kind of get a share of that, profit, how to get back your investment. And sometimes it could be buyback, sometimes it could be dividends, sometimes it could be converting your equity to debt at attractive, interest. There are many ways. And in fact, in one of the startups, the first startup we invested, we have already recouped some of our investment, even without selling our stake in a way. So that's very important, to make sure how to recover the money. So basically, you have to manage your risk. That's where the risk management part is very important. Yeah. Okay, so that's my short spiel. Okay, thank you. Thanks everyone.
Thanks, Prabir. I think your partners are very happy with whatever you presented, so they decided not to pitch in. I agree with a lot of points which you said, but the one of having an angel investment group is you can be a passive investor for X number of deals and be an active investor for few deals. So you can play both roles, which only an angel group can offer the luxury of you wearing both the hats.
Right, you're absolutely correct.
So your presentation was very useful in a lot of ways, because a lot of people who have in this conference are first time angel investors, so they really need to understand what they're walking into instead of just getting into angel investments. And I know a lot of people who do one time angel investments and they don't even monitor them, and that in my view is a recipe for disaster, because unless monitoring and mentoring, angel investments doesn't work. It's not like writing a check to buy shares of Tata Motors. So next person I would like to invite is PG Panappa. He is a pass out of 1986 batch. He has a lot of experiences in corporate sector, 25 plus years of experience. He started his career with Asian Paints and has been with other companies like Motorola and AOL India, where he was the managing director of AOL India. But in 2012, he decided that he wanted to be a part of the startup space, very active part. So he has been both investing as an angel investor and mentoring, so guiding his startups very actively. He's made 15 plus investments in angel companies till now. And the last thing is he has achieved what I call is nirvana in investments. So he's seen the full life cycle. His first step is to find a company to invest your money in. The next step is to mentor it and monitor its performance, which Prabir also spoke about. And the final step is to ensure a very successful exit from those companies. I'm aware of at least two companies where Panappa has made some good returns. The first company he sold out where Bobak Pincus invested $50 million in the company. Uh, and that I think is a great return. And the other one was a trade exit where it was bought by another US uh, strategic buyer. So what I really love about Panappa is that he's got the full experience, while all of us are still looking at investing on mentoring. He's gone to the last stage also. So Panappa, please walk us through your journey.
So thanks to you, Aso and Sandeep, for this session. I think it's a very interesting opportunity to share a reasonably exciting space. I think Prabir has done a fantastic job in covering a very, very large portion of the basic fundamentals that anybody should know of what angel investing is all about. So I'll just add a couple of points on that. But more importantly, I thought I'll share my journey of how I ended up doing what I'm doing and some of the learnings which happened thereupon. I first started mentoring a company more accidentally than anything else because I liked mentoring in 2010 when I was still working. And a friend of mine reached out to me saying there's a great tech company. The CTO of a previous company is starting a company. He needs some business mentoring. You understand tech enough. Can you spend some free time to mentor him? I said, this sounds good. I started off. About a year of mentoring around 2010, I really liked what I was doing. And by the time the whole concept of startups is starting to grow, and 2011, a bunch of friends, and we used to call ourselves the bus stop gang because all our children used to go to the same school. The dad used to come and drop the kids to the bus stop, and then the dads after the bus left would shoot the breeze and try and figure out how to make the next million. So all the dads got together and decided that we must do angel investing. So we somehow sourced a couple of companies, and in 2011 we made two investments, and we thought, we've arrived in life now. We are now angel investors, and now the next thing is a trip to wherever we want. That's when the hard reality struck us. One company sank in 12 months. It was a case of fraud. We were honestly swindled. We chased the founders later because the group was quite angry, put them in jail for about a month, but paisa to gaya. And in the second case, we found that the company steadily went downhill and refused to listen to any advice. And about 18 months, they also went dry. And the rest of my friends said, "Arey, bahut ho gaya. I'm not doing any more angel investing." But I was seeing my first company where I was actually only mentoring doing extremely well. And we had already pivoted from a B2C to a B2B. We went through all the chaoses. But here was a CEO who was hungry for being coached, hungry for mentoring, willing to listen. And like Prabir said, the whole importance of mentoring is extremely important at these stages. Can't take away from that fact because it's very rare in India to find second generation CEO. So already had a successful first exit. And if you have not had a successful first exit, you by and large are still all at sea across multiple platforms. You may be a good tech guy. You may not know pricing. You may not know strategy. You may not know HR management. You may not even be able to know how to spin a good story. So there are huge variables in it. So I was thinking a lot of time at that time about the importance of mentoring and realized that there's an opportunity to combine these two, and exactly what Prabir is doing. Only thing is I was planning to do it alone because I could not find similar type batchmates in the town. So 2012 March, I quit with the objective of doing mentoring and angel investing together. And when I started doing this, a lot of my friends said, "Hey, you know what you're doing is great. We'll also jump on the bandwagon and help you invest if you are investing and if you are involved in the company." So over a period of time, that's what the story went. So I would go and evaluate a company, spend 3 months doing all the DD, which Prabir has covered from does the guy have passion, commitment, integrity, all the stuff that you do. Is he coachable? All the stuff that he talked of while you evaluate a company. The only one point that I want to add in that was a very important factor for me is to see the moat that he can build in whatever he is doing. And if he can build a strong moat which can't be just blown away with money, because tomorrow, if somebody else raises 10 million more than you and offers a product free, it should not be easy to uncouple your customer from that, from yourself. That's a very important factor. So the moats needed or the hooks needed for the customer to be loyal to you also becomes an important part. So keeping those factors, I started getting in. And by 3 years into it, about 2015, the rhythm was falling. My whole goal, personal goal, was to see, everybody talks of angel investing being a 10% success rate. So why do you want to do angel investing? It's such a high risk, high return story. And my belief was that if I work closely and do active mentoring along with the angel investing, can you improve that 10% to 40%? Because then the math becomes totally different. And that was a goal which I set. Today, I've been actively doing this for 9 years full time, plus a couple of years part time. It's like Arun said, I've had 5 closures, 2 exits, and 3 failures. And there's a lot of learning in the failures. And I'll share some of the learnings because I think these are important things for many of you to look at. The first failure was in a B2C company. We were doing a pregnancy and early motherhood app in 2015-16. We were at that junction the market leader in India. We had over 200,000 moms on the platform. Since it was B2C, we had raised about 6-7 crores in angel money. And we were spending quite a lot of money in marketing. But we found that VCs did not like the metrics that our pregnant moms were having. And they said, oh, in other social networks like Facebook, people coming every day, your mom is coming every week. We don't like the math. And in the B2C space, unless a VC comes in, as an angel, you are by and large dead. You have absolutely no hope in it. And that company finally ran out of money. We actually returned the last 1 crore to the angels itself and said, we won't take this money because we can't scale this business. And after that, even though I come from our original B2C background, I was very careful about not doing any more B2C, primarily because the marketing money needed is not something that angels can control. The second and third failures which I had were companies where the CEO was a brilliant domain expert, but did not have a strong tech co-founder. Both the companies had hired senior tech guys. That model doesn't work. And both the companies after 3 years or 4 years gave up because the founders just could not implement their own personal vision because the tech guy either was not competent enough or didn't have the capability or the attitude. So some of the caveats that I keep in mind is that if you're looking at tech, I mean, you can obviously look at non-tech as a business, FMCG or whatever it is, if that's your sweet spot. But if you're looking at tech, there has to be a tech co-founder, non-negotiable. And be very careful of B2C because unless you have a backup with a larger investor coming up, the risk is very high. Now let's look at a B2B company. Typically, B2B companies will need maybe 1 crore of rupees to run operations for 12 to 15 months. In that 12 to 15 months, you can have enough milestones to raise another couple of crores, which can give you another stretch for another 2 years. And at some junction, it can become either cash break even or fundable by a VC. Those are the type of math you can look at. And hence, B2B or B2SMB is a less risky thing for an angel investor to look at. All other things given equal. Don't jump to it just because it's a B2B company. The other thing which I have done in this whole process is, what I call this whole process which I run is something like a deep incubator and mentoring process for these companies. And I work very closely with them for years. Many of my companies are now 5 years and 6 years old where I've been actively involved. My first company which I've exited, I'm for some reason still involved, but it's just one phone call a month. But the companies which I'm actively involved have also seen 5 years or 6 years, and which is what the other point that Prabir said. In India, it's a 5 to 10 year cycle. It's not a 3 to 5 year cycle, which is typically the US thing. So you need to have patient money, and you need to be willing to look at the risks of, at the end of 6-7 years, it's a write-off. From a write-off perspective, if the company dies, it will typically die in the first 5 years. It won't last out more than that because nobody will fund it after some time. But the other issue is, how do you plan for an exit? And that becomes a strategy thing when you're investing itself. And the ability to think that, you know what, here are half a dozen companies which can potentially acquire it and make strategic fit for them. So some of these things are important to keep in mind. One very important factor which I have found in the mentoring space with the startups is the ability to tell the CEO what not to do. He's at a space where everything is an opportunity. This is an opportunity, that's an opportunity. And it's extremely important to lock down your vision and mission early enough. And anything which does not fit into that, you should absolutely say no. Because it's a big challenge. And I've had situations where companies have bitten off 2 or 3 things because customers coming, how can I say no, blah, blah, blah. And a year later, they've realized it's a bad experience and cut their losses quickly. Today, I've reached a situation where if the company doesn't get a strategic focus very quickly, I come down like a ton of bricks and tell them, if you don't do this, you are dead. And literally, I've given them multiple examples. So more and more companies are coming into this thing. And the best example which most people can see is Flipkart or Amazon. You start with books. You can sell everything, but you start with one vertical. Do that bloody damn well, and then you can migrate to other things. The other thing which I wanted to leave here is this whole issue of how you can open a network. All the angels, other than strategic mentoring and counseling, they need more funds and they need network and business. What I've been able to achieve in the last 10 years is some sort of a personal club. Think of it as a very informal club of 150 angels who have invested in the 15 companies that I have worked in so far. 15 of them are from IMC, about 11 of them are classmates of mine, and 3-4 are from a couple of batches, senior and junior, this way and that way. These 150 people are in a very different set of ecosystems, and that helps open networks like nobody's business. And that's a big value that you can bring to a startup when you do that. So this is broadly the journey that I've had. I think I can share much more as we get into more detail, but I'm extremely happy with the initiative that IMC is looking at, the portfolio that you guys are in, the experience that you guys bring to the table is unmatchable and can make a substantial impact to the ecosystem. Thank you very much. Arun, over to you.
Yeah, thanks, Panappa. I couldn't agree more with you that exits are the most critical things finally. Whether you do a trade sale, whether you do a next round of investor, it is very important, and this is one of the focus areas for us in IIM-CAN, which we'll talk about later. We are also very lucky to have Aso and Sandeep as the founders, and Aso brings a network of 200 IMCNs at this stage through his C-Marketplace. So we are generating the network which will help companies to grow. The last person I want to introduce is Subrat Pani. He brings the other side of the table, which is he's an entrepreneur. And Subrat is a 1995 pass out. He worked in various finance and banking companies like GE, SBI Cards, then Kotak Bank, ICICI Bank. So he has a wealth of experience in the consumer behavior and consumer lending space. I guess he decided to capitalize on it and set up his company called One Assist in 2011. One Assist is, in my definition, a very successful company because it has raised 3 rounds of funding, and it's not easy to raise funds unless you consistently raise funds, unless you can demonstrate that you're creating value. Finally, One Assist also, what the product it offers is essentially insurance cum service product, which Subrat can talk about better. Incidentally, the Mumbai chapter of IIM Cal holds an event on an annual or a biannual basis called Clarion Call. And this year, this initiative is being headed by Subrat. I'm sure he would like to talk about it a lot. Simply, Clarion Call is IIM Cal's Mumbai chapter's way of promoting entrepreneurship. by getting those entrepreneurs incubated, getting them sponsorships, giving them some prize money. Over to you, Subrat.
Thanks, Arun. It's great to be here. I think this is a different kind of a talk. And firstly, thanks to you, Aso and Sandeep, for putting this whole thought and taking it to action. I think we always keep talking about it, but it's finally there. And now all of us are here talking about it. So I think it's a great initiative, and there is a lot of need. I think I was, while going through what Pravir has to say and what Panappa has to say, I was wondering, I mean, why am I part of this panel? But then I realized that, I mean, if you look at the mix, so we have two experts and two different models. I think both Panappa model is little different from what Pravir and team are trying to do. And then here there is me, who is an entrepreneur also, as an accidentally an angel investor. Because I realized this is a good mix. Because if you look at the audience today, who is there, I think there are a lot people who are like me. You know, it's like so those are the accidental angel investors. So getting onto this, I think it was very well articulated in terms of what Praveer put in the context and the framework. And like Panappa says, it's really a full-time job. So in my experience, I'll just share with you why I mean, of course, driving my venture and company, and alongside that, I was doing all these things. So I think there are a couple of takeaways. So I did my first angel investing. That was happened because I was mentoring, and hence I thought I'll write the first check, and that's how it happened. That was in 2012. So in last 8 years, I have kind of involved in 7 startups, and maybe I'm mentoring more, but as an angel investor, I'm involved in 7, and the statistics are I mean, as expected. So just to share with the audience how interesting and how risky it can be. So out of this 7, there are 3 which are no more there. And I mean, Panappa spoke about 5 years, but I use a thumb rule 1,000 days. So if a company doesn't survive 1,000 days, I mean, basically, if it has to survive, it will survive 1,000 days. That's an important milestone. And I mean, 3 years is good enough. Otherwise, you're not going anywhere. So 3 of them are dead. They don't exist. And one is possibly in the ICU, but might survive. So that's the way I will summarize. And there are 3 more which are doing good. One of them is in kind of getting into Series B, and the other 2 are in pre-Series A, but okay, have strong growth and this thing. So the point, what I realized as an asset class, I mean, that's what Pravir was talking about. You know, all investments are mostly rational. There are a lot of modeling, there are a lot of analytics, there is a lot of algorithm, a lot of quantitative. Why this as an investment class is the most difficult one? Because there is emotions. So if you analyze that, you know, when you decide which stock to buy and which to sell, there is no emotions. We are looking at numbers, performance, and all that. So I think this is one of the traps. And the reason why I'm calling this out is that this is something which is hidden, and as human beings, we will not realize. So I think this is the only investment class where there are a lot of emotions involved, because you are involved, because you are working with the co-founder, and because you are looking at things with lot of hope, and it's going to work out. Things are going to, the next deal is going to make things work, and we have 5 things on the pipeline, blah blah blah. So the first thing what I feel is that if you're trying to get into this, I think the why do you want to become an angel investor, I think that's the question where you should spend maximum time. And I mean, of course, the other side of that, the brighter side or the positive side of that, is that when you are part of a journey and starting from scratch, and you're helping an entrepreneur in whichever way you're bringing in your experience, your expertise, and helping them to grow, that's obviously immensely satisfying. So it's kind of a mixed bag, but the awareness and the consciousness around that really makes a lot of difference. There are a few things which I've learned along the way. I think most of it has been spoken by the experts. I mean, I really like Panappa's story is very impressive. And I know Praveer for many years now, and I know how methodically they must be approaching this. So there'll be all the important factors have been highlighted. But I think there are few things we accidentally get drawn into mentoring, like Panappa did, and then he got into the angel investing. But imagine, suppose you would have been still pursuing his corporate career and still have been doing these things by the side. I'm sure the story would have been very, very different. So that's the first thing is about time. So if you're really serious about it, are you willing to commit that kind of time? You're talking about that, and that's the rigor and having a process, and reaching out, having your monthly calls, understanding where the company is going, because it just takes 3 to 4 months for a startup to suddenly blow up a lot of money, which is 6-7 months of runway, and then you go back for the next meeting, then you realize, hey, last time we met we had 18 months runway, and now you're left with 4 months. What happened? No, we thought that it was doing good, so we scaled it up 5 times, so we burned 4 times expecting 6 times growth in revenue. For 3 months the 6 times 6x did not happen, but the -5y happened, and this is where we are. So you're left with, we just went through, not because of COVID, I have gone through one experience with one of the startups. This is exactly what happened. So I think how much time you can give and how frequently you want to stay engaged, that's, I think, is really critical. I think it has been already spoken about, but I'm just taking out the big ones. And sometimes, have you, if you have already invested as an angel, so what's the check size you're writing and how did you start? I think that's really matters, because like Pravir articulated, what do you need to be an angel investor? You really need to be very, very patient. You need to have your personal time to get involved and to work very closely. But the third most important point, which Pravir articulated very nicely, was that, do you have investable surplus that you want to throw away? Are you ready to waste some money? And hence, that's the beginning of the journey. So I think that realization is important. But I sometimes find there are people who are angel investor in one venture, and incidentally, they are the only investor. So then you know what it means. It's a definite recipe for disaster, because see, this is a very complex journey for a startup, for a company, to find out its path, product market fitment, then scale up, then risk, and then of course your growth and profitability. So it's a very complex one. So if there are more people who are validating, the more angel investors, seed funds, more people involved and willing to write a check, is a clear validation. It's like not you have validated, but 5 other people are also validating, or 10 more people are validating the hypothesis. So I think that's those are some of the things you should never be doing, and these are all learning from the past. If I analyze the failures, and those are very low scale failures, but these are some of the things I learned. And in one of the startups, I was the only investor for 3 years. And hence I knew it's not going anywhere. I think in terms of I felt the why part of it how is more important, and then the how part of it, like what this community is also trying to do. I think there are a lot of solve for how to go about it, and we spoke about that. Like the safest way could be to be a passive one and write small checks, be part of a network, and then get involved. Like the dual hybrid model, where you're a passive investor through an angel network, and then you are also involved actively with 1 or 2, and you start your journey from there. So that has been the crux of the learning. I think thinking it through, why do you want to do it? And it's not like a diet plan or an annual resolution that, okay, this year I'll do my first angel investing. It's a long game, so you need to prepare for it. Are you in it for the next 8-10 years? And then it makes sense. If it is the adrenaline rush, the passion, and the joy of building something along with somebody, that's the key motivation. You should be willing to put more time and attention and have a long-term perspective. That's what I have learned. So what I do is that only if I get excited about the founder, and if I get extremely excited about the whole space, that there is something new to be done and there are opportunities. You can't always size it, because these decisions are not at all about spreadsheets. It's a lot about the chemistry and the conviction of the founder. And like Panappa also made out a good point, that what is the core of that business, and is the founder does he belong to the core? So if it's a tech company, is the founder a techie, and what he brings? So I think these are the few things. That's how I look at things right now. And that's where I'll rest the story. And I will not like to claim that, not at all, that I'm a successful angel investor or anything of that sort, Arun. Just to clarify that point we discussed in the morning. Thank you. Thanks for inviting, and great to be here.
Thanks a lot, Subrat. That was a very lucid exposition of what an angel can expect. And I always tell my entrepreneurs that it's impossible to know, but there is a type 1 error and type 2 error. Type 1 error is when you quit before it becomes successful, and type 2 error is when you continue dragging even though there is no chance of success. And it's so difficult in real life to know whether you are a type 1 error guy or a type 2 error situation. So that's something which I think is one of my takes. And monitoring an investment is very important because that's the only way to make sure that it's performing. It was mentioned earlier that entrepreneurs should be ready to be mentored. It is so important because a lot of entrepreneurs think that they know the best and they are not so open to ideas. Thanks, Subrat. And now I would like to invite Sandeep to talk about what is the IIM-CAN way and walk through how we want to do things in the IIM-CAN. Sandeep, please.
Yeah, thank you, Arun. Arun, can we give 5 minutes to Subrat to talk about Clarion Call, the announcement?
Please.
Hey, sure. Yeah. Thanks so much, Sandeep. So,
Yeah.
I think I know it's a great opportunity and good to talk to you. So, the IMC Alumni Association Mumbai chapter, we have done in the past few startup events. So, Clarion Call 1, 2, 3, but those were again in different models. Last 2 years we have not done, and sorry, last year we did not do. So this year we are doing the Clarion Call 4. And interestingly, so this is basically a platform to invite the best of startups and founders, very early stage, early revenue, POC done, startups across categories, across industries, and to invite them to participate in a contest and take them through the entire assessment and evaluation process. So now we are looking at around 200 to 50 startups to participate, and then we will be going through the evaluation and assessment process to maybe make a list of 50, 60, and then a final list of 12 to 15. But the great news this year is that we have partnered strategically with IIM Calcutta Innovation Park, the incubator at our institute, and that also brings a lot of expertise in terms of conducting the program and supporting the entire program. And not only that, the good news is that the incubator has also agreed to incubate the winners into that, because I think the most important thing in doing all these events is that how do you track those startups after the contest is over. So I think that was one of the missing links which was there. The second missing link in the past also has been how do we get more alumni who are really interested. We keep coming across them who wants to be involved with startups, want to advise them, be a mentor, and also maybe become an angel investor. But somehow getting the right platform and the right network to do that has been a miss. So I think that's the effort in putting this program together. I and there are a group of people who are working on it, and Pravir also has been part of it for the last 3 years, is really helping us, guiding us. And we are reaching out to people to put this program together, and we will be reaching out to all our alumni, and we'll be using your community as well, Sandeep, because now that the supply side is what is going to come through this, and we will work with IIM Cal in terms of getting the demand and the recruitment side. And of course we are also reaching out to our kind of some of the established alumni in terms of their support, time, and even sponsorship. So thanks to everybody. So in the next couple of months, so this event is kind of tentatively planned for 10th April. It could be a week here and there, and the program should be getting launched sometime in February mid. And so we will be connecting and reaching out to some of you, and look forward to your association and an engagement into this in whichever way you can chip in and contribute, either as a mentor or as an investor, or even being part of the program, or offering your corporate product service offering, whichever way to the startup. That will go a long way. Thanks so much.
Thanks, Subrat. I forgot to talk about Clarion Call, although I mentioned about it in the beginning. Then, so Sandeep, can you take over and let people know what we plan to do with IIM-CAN.
Sure. Thanks, Aaron. I'll just share my screen. Hello, everyone. My name is Sandeep, and I'll take a few minutes of your time to explain what we are doing at IIM-CAN. So I'm going to explain what the IIM-CAN way is. This is to explain the kind of steps we're taking, the kind of outcomes we're looking for, and in short, trying to ensure how we're bringing everyone together. So one of the important metrics that we look is to improve the odds of success for startups. This is one of the most important thing for IIM-CAN. And when a startup founder looks for a product or a solution to solve, and then he proceeds to form a team, and then he tries to find his product market fit, and then even go on to scale up. During this journey of finding product market fit, he generally raises the seed and pre-series phase. These are generally the stages at which IIM-CAN enters or is interested in. So we refer to the process of finding the entrepreneur or the right startup as the investment process, and it ends with IIM-CAN basically trying to match the angel with the entrepreneur. Then we look at the growth process, where we are very interested to understand how this startup can achieve various growth milestones so that it is nurtured and it is well prepared for the next important process of exit. This exit process is actually more to do with finding the right next set of investor who is ready to invest in the business so that there is an exit for the angel. So these are the three important process: investment process, growth process, and exit process. In the investment process, that is finding the startup, Hackstrap comes into picture. Hackstrap is trying to build an ecosystem for startups. So we want to build a collaborative way for private companies to match and find and work with investors. So we have developed important parameters to do the same. C-Marketplace is a is especially trying to look at matching entrepreneurs with business leaders so that very important steps and processes can happen. And we'll look more closely into what they are very soon. And Edge IB Services is a boutique iBank, which is basically focused on trying to help startups which are ready to raise the next round of funding. Hackstrap tries to look at things like screening, deal flow, and due diligence. Screening in the sense of trying to reach out to startups for them to apply and ensure that we select some of the startups which make sense for IIM-CAN. Deal flow is to ensure that there is a steady flow of good deals so that investors can consider them and then decide if they want to take it to the next step. And due diligence is kind of a final check to ensure that it is well prepared. It is meeting all the essential requirements for it to get the funding, to raise funding. When that if the startup raises funding, what happens with C-Marketplace is that it helps the startup in the growth process, and it does in four primary ways. One is traction. What we mean by traction is that a startup should be able to get preliminary set of the initial clients or some pilots which will help it to understand its customer base better, understand better its product market fit, and other things. So that is one way C-Marketplace helps the startup in achieving early traction. Toolkits are ways to they try out interesting products and services, which are again part of the C-Marketplace ecosystem, which will help them to do things in a much more accelerated manner and in the right way. So there's no loss in terms of finding the wrong service or wrong product, which wastes your time and also money. Intros are basically a C-Marketplace way of saying that sometimes as a startup it becomes very difficult to approach someone and pitch your product or even get a particular green signal for them to engage with your product. So intros are a way which facilitates uh, for a startup to very easily get that kind of a connection, which helps them to get more feedback and more product trials. And CEO Quora is actually a form of mentoring where startups, when they come into picture of trying to understand dealing with various bottlenecks, trying to understand what is the best way to go about it, or trying to understand a space, get more mentoring or feedback. All these things are covered under the CEO Quora, whereas the founders are going to engage with different stakeholders to essentially learn, adapt, and grow their understanding of the market and other areas. So, and then Edge IT services, what the role it's going to play in the process of exit primarily is to ensure that the deal, which is the deals which have finished the due diligence process, are now in a stage where the deal is being executed, and the final deal lead is trying to take it forward and ensure and prepare everything so that the deal, finally the money is raised by the startup. Pipeline is a way to ensure that all the startups which are invested by IIM-CAN are in such a way that the next investor, next logical investor, is ready to pick them up, and when they are ready to pick them up, the process of exit starts. And then, so this is the whole, again, the top view of the whole IIM-CAN ecosystem, what we refer to. We have three particular firms here managing different areas and different journeys of the entrepreneur, from him trying to discover the angel and then trying to get the exit, and in the process, achieving the necessary scale and growth. Thank you, guys.
Yeah, I just want to add one more thing, that we will have deal leads for each transaction. And the deal lead is nothing but the person who decides that this is a good company to invest in. He does due diligence supported by the team, and then other investors pitch in. Because in every deal, you won't have only active investors. The way we look at it is, a deal lead is the active investor, maybe one or two of them, and the other guys will be passive investors. As Prabir mentioned about it, it's a hybrid model. We can't have 40 active investors or 10 active investors in one company. That's the way it will work out in future. Now I think we are ready to throw the session open for Q&A session.
Yeah, I'll take the first question. Will IIM-CAN have their own fund, or will angels invest directly as individuals?
Yeah, let me answer that one, and I typed it already. We don't have any plans to have our own angel fund at this point of time. We are, of course, recruiting the angels, and we have now around 60 plus angels who have signed up. And as soon as we have the deals, we'll be facilitating these angels to invest. I hope that answers the question. Yeah.
Okay, then we have which industry or area has GMCB been investing in? Do we plan to have a sectoral focus for IIM-CAN?
Well, we are quite agnostic in terms of area or industry, but we do prefer B2B space and tech related enterprises. So basically, we have got two of our investments in logistics tech, one in the AI ML space, one in bioinformatics, and one in pharma drug discovery platform. Does that answer?
We can talk about which are the focus areas for IIM-CAN, which is there in the website. So maybe you can pull that slide. We have mentioned which are the areas.
Yes, I'll just paste it in the chat also.
Yeah, do that. So essentially, we are sector agnostic, but we have preferred sectors: EdTech, Agri-Tech, and there are few others which Sandeep will post on the screen. So
yeah, I have already shared it. We have Agri-Tech, Clean Tech, yeah, SaaS, Deep Tech, FinTech, and gaming, etc. What is the minimum amount qualifying to invest into this angel investment fund?
So the minimum amount that we have worked on is at this point of time 2 lakhs. So that is where we are standing at this point of time.
Do you want to take help of outside agencies in doing due diligence?
So due diligence has various legs. One is legal due diligence. One is financial due diligence. In a startup, financial due diligence is not that much. Legal DD, yes, we will be working with partners, so that definitely is going to be outsourced. We'll have some partners who will help us in legal and financial DD. As far as the operational DD is concerned, we think that's our core area, because only once we are convinced about the company, the moat and everything, will we go to invest in it. So the first part of operational due diligence would be with IIM-CAN. The other two parts will be outsourced to partners.
Is there a typical investment size you are looking at, both total investment for a company and per investor?
I think Asu answered the first part, that we're looking at minimum 2 lakhs per investor, and preferred ticket size would be 5 to 10 lakhs, but minimum 2 lakhs. As far as the company size is concerned, we are looking at investing between 2 to 7 crores in a company. That's what our objective is. And we can co-invest with other groups if the fund requirement is more.
There is need of explanation on your process of identifying potential companies and offering it to any IMC alumni. Will only IMC alumni companies be opted or outside are allowed? What is the process for selection of angels to be able to pitch for a company?
So to start with, this is an IMC alumni network, and preference would be given for entrepreneurs who are from IMC, but I don't think we are totally stuck up on that. But as of now, the investors have to be from IMC. You could have done various courses in IMC, which we have mentioned, but angels have to be from IMC. Entrepreneurs, yes, we have a lot of already existing network of IMC guys, so we would prefer them, but I don't think we are hung up only about IIM Calcutta entrepreneurs. I think Ashok can add much more value on this point.
Yeah, no, before that, Sandeep, can you just handle the first question, your process for identifying potential companies and offering to any? I think that's where we can talk about
Yes.
framework.
Yes. So at Hackstrap, we have developed a framework to screen up startups. Most of it is very much automated, and then there will be a set of questions to basically look at after that framework is done. The framework is of a score of 100. When a particular startup reaches process a score of 65 out of 100, we show personal interest in the startup and take the deal forward. So we have developed a framework for identifying potential companies.
Yeah, coming to number 3, what is the process for selection of angels to be able to pitch for a company? So what I'm understanding is that what kind of angels, who would be allowed to, let's say, approach a particular deal? I hope that is the question. So we had already in the sign up for the angels, we have a question where we are asking them where they are interested to invest in, and according to that we'll form the cohorts, and based on that cohorts only we will invite those particular angels if they want to participate in a particular deal.
Nitin asks, I might have missed it, but what is the relationship between Hackstrap and IIM-CAN? So Hackstrap is one of the partner in IIM-CAN, helping in the investment process of the whole of the many steps. In the investment process, it comes to deal sourcing and deal evaluation, and also doing some basic due diligence. That is what Hackstrap will try to handle. We also have another question about deal structuring. X stake for Y amount of money or discount to next round is also an option, and all the hybrid models possible between. I think this is all the convertible notes and all. I think Arun will be.
Yeah, I was going to answer this. At this stage, I think most angel networks prefer direct equity investments, because convertible notes, although they sound very good, don't have the outcome which people are hoping for. So we would prefer to do a simple equity, which is X% for Y amount. That's our thought at this stage.
Yeah, Yogesh asks, what is the fee structure or business model for GMCB and IIM-CAN?
I think we will ask Prabir to handle the GMGB part.
As you see, all the investments that we have done in our own personal capacity in terms of angels and or involved as mentors. We have not like done anything where we are working with other investors, but that is something we can do in the future. But at the moment, we don't.
So, coming to what IIM-CAN wants to do, we will be charging 10,000 rupees to people who sign up as angels and mentors. That's an annual fees, which would be to make sure that serious guys look at deals. Otherwise, it becomes very difficult to know whether anyone is very seriously looking at investment. That's our sort of hurdle to make sure that we get only uh, serious investors. So, you want to add on this?
So, yeah, regarding the other, what is standard in the industry, where we take a particular cut for the deal that we facilitate, that is something which is still under discussion, and we would definitely would like to take the advice of the senior angels here, and according to that we'll take a call. The only thing which is fixed at this point of time is the annual fees of 10,000, which Arun just mentioned. The rest is still under discussion.
Yeah, so we'll be in line with what other angel groups like IP Ventures, Mumbai Angels, Indian Angel Networks do. So there's some guide, but we would definitely like feedback from the senior angels to see what is workable apart from the fees of 10,000 baht.
Yeah, Pratik Agrawal asks, if one doesn't have time to spare, I guess we have to be just a financial inactive angel.
Yeah, so that's the beauty of angel networks. Everyone does not need to be an active investor. You can be a passive investor and you invest in companies where you know the deal lead or active investor and you believe in him. And that is one beauty of an angel network itself. But that's what differentiates us from something like Prabir, because Prabir is actively mentoring every company. We are also actively mentoring every company and monitoring it. But the people doing that will be different for each investment. So we have a lot of sector specialists who can help us in doing this. And you can be a passive investor, and that's what Prabir referred to as hybrid model.
Yeah, next question is, who reviews the shareholding agreement to help first-time angels be confident that they are not contractually protected? They are contractually protected. VCs or Ps don't cut them out when the company shows progress.
Okay. This is a tough one to answer. See, we will obviously sign a legal agreement when we invest as IIM-CAN. Now, in practice, the next round depends upon how strong we are. If we are in a strong position and we have 3 investors, then we can, as a angel group, negotiate hard terms with the VCs. So our original investment can be extremely watertight, but the next round investor, our VC fund, will have some role in what we want to do. We can have some nuisance value in terms of having strong minority rights, which we will have. So we will have minority rights as a angel network.
Next question is, we also have a question like, do you want to invest in non-tech startups?
Yeah. So if you let me see whether there is a list. We have also got domestic consumption theme, which is direct to consumer. So we're not just limiting ourselves to tech startups. We look at themes which are, frankly, we look at themes which are liked by VCs so that we can get an exit, because that we said from the beginning is we want to make sure that the investees are liked by the next round of investors. So D2C is definitely, which is direct to consumer, or what we have mentioned as domestic consumption thing, would definitely be there. Others, I'm not too sure about what it will be, but these are our preferred sectors. That's all.
The next question is, some of our alumni are also associated with VCs and some have floated their own funds. Would you be open to these funds co-investing along with the angels, and would you be looking to sourcing some co-investment opportunities along with these VCs on some of the opportunities they are evaluating?
Yeah, I know Private Partners has our alumnus. Maybe there are other companies also. We don't mind working with them, but finally, if it's a $5 million deal and we're going to put 2 crores, what contribution we have in that deal is the question mark. What value the VC sees in us is a question mark. But otherwise, we are absolutely open to working with venture capital investors, whether it's a seed round, whether it's a pre-series A or a series A. We don't have any inhibitions on that.
Yeah, just let me add something here. I have been in talk with a few VCs also, and one of the offer that we make to these VCs, which is a part of our whole exit process, which Arun will be leading, is that we offer to those VCs that see, we already have a network of 200 plus companies, and if you have a portfolio of, let's say, 30 or 20 companies or 50 companies also, we give you access to this C-Marketplace network, and you can, of course, your portfolio companies can get whatever the IIM-CAN companies are getting. So of course, the quid pro quo is that, of course, you also know what deals are available from IIM-CAN, and you be in touch with us, you stay connected with us, so you know, and of course pick whatever is suitable according to your investment philosophy. So this is another way that we are collaborating with the VCs so that the exit process is made smoother.
There is another question on what is the total investment size for what kind of equity is IIM-CAN looking for?
Okay, that's not been decided, but from my experience of dealing with angel investors, they're looking at minimum 10%, maximum 20-25%, because you don't want to dilute the entrepreneur so much in the beginning that he has very little room left for next rounds of Series A and Series B rounds of funding. So, but you don't want an insignificant part. That's what I guess our sweet spot would be between 10 and 20%.
Yeah. So Alok asks, is the process of identifying and rating companies on the website? I'll answer this question. So we have a application form for entrepreneurs or startups to apply for funding. Post that, we will send them a questionnaire, which is the HIS framework, which is Hackstrap Investability Score framework. We'll have a series of questions, and most of them give them, and using the when they take the question, we will assess them out of a score of 100, and the form is basically open. We have it kept open and anyone can check it out. We have tested that form out so far, and we are also engaging with many prominent angel investors and VCs to better the form and continuously improve it. The next question asked by the same person is, deal structures will be by each company or vary?
Mostly, okay. So I guess by deal structure, we mean whether we'll invest in equity or whether we'll take convertibles. As of now, the preference is to take equity, direct equity. That's what our thoughts are, but we can discuss. But right now, the deal structure will not be deal dependent. We will take a call depending upon how it moves ahead.
Yeah, another question is, do you have process to assist NRIs to invest, and if so, what?
Okay, so NRIs can invest in Indian companies. That's a no-brainer. But yeah, we required some FCNRE forms or something like that. So we will obviously assist the NRIs in complying with those requirements. And we are very happy to have NRIs as investors.
In fact, there's been a strong demand to hold this next session sometime later in the late evening so that our friends in the US and the other geography can also participate. So I think we might have to have a session sooner than we had planned for. So perhaps at that time, we would be able to address this question in length.
Yeah. I also have a couple of guys writing to me that this time doesn't suit US residents at all. So we will do some. Yeah.
Yeah, one more question. Within B2B, will you also look at domestic businesses as customer segment or the good old playbook of market outside, development in India?
Okay. Ashok can maybe add on it, but I will say my off the cuff response is we are very much happy with domestic markets being there. The point is only one, and that is whether the domestic market has the size for a sizable for a company to become a $10 million company, or that's the only question. Otherwise, we are more than happy just to look at domestic markets, and we think domestic markets are the only way to go, and that's up. So it's not necessary that we are looking at India as the development hub.
So for me, there's not so much that we are taking a call as far as IIM-CAN is concerned. We will have the process which Sandeep has mentioned. The framework is there, HIS framework is there, where the evaluation will be done. And once if things are, up to a mark, then only it goes to the angels. And it's up to the angels whether they like that particular story or not. So we are not biased towards whether it's India's story or it's outside of India's story.
One more question is, why do you call yourself social capital?
Oh yeah, I think
I think I should answer that.
we have written very clearly, not just smart capital, social capital. So please expand on that.
So it is smart capital raised to the power of social capital. So so one of the most underutilized power that we have within the whole IMC community is the that we don't fully utilize the network properly, and that's where the C-Marketplace comes into play, and that we are facilitating that. So let's say in my just experience of the past 10 months, at any given point of time, if let's say any startup person comes and talk to me, the least I can do is make 5 connections for him, just outside of the just inside the 200 plus companies which are there. And as we keep on expanding this, the power of the network will grow, and that's where the whole concept of power of social capital comes in, where things become far more easier to to have a conversation. To generally, I'm from the sales and BD background, and I have done enough of this cold calling and cold emailing and bothering people on LinkedIn. So most of the time it doesn't work. But if I'm reaching out, or in this case, I have been facilitating people to reach out through the C-Marketplace network, and there's hardly anyone who doesn't get a decent time to hear what the other person is pitching. So, and also we have seen that because the trust level is so high, it's not something that we have built, right? This is something that we are deriving from the IMC shared heritage. So the trust level is so high that things become much faster, and that is what we are talking about, the whole social capital, that things will move way faster, conversation happens faster, deals get closed faster, and everything is the growth is way faster than, let's say, it was mentioned, right, that 5 years timeline is what we are looking for. But hopefully, maybe we can even crunch it to 1 or 2 years also for some companies, some type of companies. That's what we mean by social capital there.
Yeah, so I'm not sure whether you spoke about C-Marketplace, and I think a lot of people who are not entrepreneurs wouldn't be aware of C-Marketplace. The ones who in corporate jobs.
I think I should have done that in the beginning. I was the one who has been spamming most of the people in our IIM network, so I thought that maybe everyone knows about C-Marketplace.
Entrepreneur network. While there are a lot of people who are in very good corporate jobs who are not spending time on the IIM net. Entrepreneur.
Yeah. So C-Marketplace is a network for entrepreneurs and business leaders of IIM at this point of time. Hopefully, we'll expand to other institutes also. And we have around 200 plus companies there. And we have another 90 plus companies who are not entrepreneurs and all, but who are assisting larger companies which are assisting these startups and companies which are run by, where the founders are IIMCans. The basic idea initially was to access leads within the IIMC fraternity and to work more as a community. But over the period, what we have found is that there's so much more which can be done. So we are just scratching the surface. So this creation of IIM-CAN Angel Network, that it didn't even take us, let's say, 2 months to put it on the ground, just because of the C-Marketplace network, and because I was already connected with Arun and with Sandeep. So that's the speed for creating this particular angel network. Not even 2 months. So hopefully this kind of speed would be replicated for anyone who is interested to tap into this, from startup, from a single person founder company to even to a large corporate. And that is another thing that I'm working on. Hopefully I'll be able to share this in some other forum. Yeah.
Another quick question or deal structuring. It goes like this. Will you invest in Delaware Corp, particularly if it is a B2B with market outside? Such a structure, though, is a logical market need for the company, but question is whether IIM-CAN Angels will have the willingness to invest in an offshore entity.
Oh, that's a very interesting question. I always thought that offshore entities need much more money than just 1 crore. That's why we've not explored that. So the answer is we've not thought about it, but we could look at it. I mean, a lot of Indian companies have Singapore outfits, but I don't think anything like 1 crore makes any difference in Singapore. We have not evaluated it, but we have to figure it out.
Yeah, one question specifically on Hackstrap. Does Hackstrap offer services to startups or founders too? And if so, what? At Hackstrap, what we are trying to do for startups and founders is that we help in investor outreach, where we track more than 10 parameters on every investor and recommend them what is the best investor to go forward with. That is one thing we do. And the other thing we do for startups is also, if they are in a B2B space, we help them find the prospective clients in the similar fashion by taking some 10-point signals to recommend them the best kind of other businesses to target their sell and products or services for. Yeah, I think we have answered all the questions.
We also run beyond our time, but that was expected, so that is fine. So if we have run out of questions, I would like to wrap up. Thank everyone who attended the session. It was really nice, and particular thanks to the panelists, Prabir, Panappa, and Subrat, to take time out and educate investors about what angel investment is all about. So important, and to share your experiences. That was very, very useful and informative to me also.
I just wanted to give my thanks. A great session.
Yeah, so you should do a BD page also.
Sorry?
Do a BD pitch, no? What you are good at, or what to expect next.
As the Panappa sir also said already, as a person who is starting, he sees opportunities everywhere, and then it becomes a bit difficult to focus on. That was something which was the situation for me. And instead of, let's say, following each and every opportunity for myself, what I have been encouraging, and people in the audience also, it's something that I see that any company can fit in. In this case, let's say I saw that Hackstrap was the best company to help create this ecosystem for evaluating deals and all. So like that, because I'm talking to so many company founders and people there's so many opportunities which are there, which you can even do when you have a job also. Of course, angel investing is just one part of it. There's way many more where you can actively help. And that help also will translate into something for you for sure. And this is not karma logic speaking. I have seen this happen. So I would definitely encourage every one of you to get involved, and in whichever way that we can within the community. So that's the thing that I would request on my behalf on C-Marketplace. Yeah.
So before I wrap up, I request everyone who is still not enrolled as a angel or mentor to do that.
Thank you so much, Arun, for that reminder again.
Thank you. Thanks, guys. Thank you.
Thank you, Subrat.
Thanks, everyone.
Thank you, Prabir.
Thank you, Prabir. Thank you, Subrat. Thank you, Panappa sir.
Thank you,
Thank you,
Panappa sir.
everyone. Bye-bye.
Guys, thank you so much.